All right, good morning. Hey, gang. Nate Bear here, lead technical tactician for Monument Traders Alliance and Trade of the Day. And in today's video, I just want to update everybody on the charts that we've been discussing, the weekly charts, the big boys, on the indexes, the S&P 500 and the QQQ. And then I've got a somewhat counter trend trade that I want to show you, which is setting up potentially this week. All right, so let's just dive right in. Now, the first chart I want to look at, I'm going to highlight these drawings, is the S&P 500. It's the weekly chart. And if we come in here and we sort of draw our channel, last week, things were getting a little bit hairy at the beginning of the week, okay? Well, really towards the end of the week before, closing in down here at the lows. I'll be the first to admit, I thought that we were going to come in and take out that low from the previous week. Instead, what we had was about a 5% rally to the upside. So, you know, everything rallied. We had a lot of strength. We had strength in the indexes, in every sector. It was a very strong week for a lot of different areas of the market. And because of that, the nature of this chart sort of has started to shift, where it looks like, okay, you know what? That Santa Claus rally might just be back on. If we come up and break the top of this trend line, yeah, it's game on to the upside. And it looks even better in the Qs. Check this out. So we've been talking about the same thing. The structure of this chart is even better, in my personal opinion. It's a very clean channel, a very clean bull flag. And now we're sort of breaking above the top of the channel. Very, very bullish sign. If we can get a shift in the momentum, perhaps this week, I think it's time to just switch completely into buy the dip mode and into the end of the year. Last week was a very, very powerful reversal candle. Now, with that said, where do we get long from? Right? Where do we want to get long from? And I want to show you the idea that I've been sort of tracking, which is the potential, all right, of an actual reversal pattern here on the 78-minute chart. So the SPY 78-minute chart. A 78-minute chart is just one trading day, right? There's 6.5 hours in a trading day times 60 minutes. So you have 390 minutes in a trading day divided by 5. That gives you a 78-minute chart. So I know it's kind of weird. What's a 78-minute chart? Well, that's what a 78-minute chart is. And as you can see here, for those of you, especially who are in Daily Profits Live, you know exactly what I'm talking about. But we have a sniper setup, which is a reversal setup in the SPY, and it just happens to be on a 78-minute chart. So we've got an extremely overbought level, right, in the RSI. We have an MACD cross, and we have a confirmed trend. A confirmed momentum shift in the squeeze indicator, right? So when all this comes together, typically what I'll do is I'll come in and look to reverse that. And it doesn't mean that we have to come back down in here and break the lows or anything like that, but it usually means that the continued upside is done until this set of signals works its way off. So we could go sideways. We could just go sideways before going higher, or we could come back. Now, I think it'd be cleaner if we came back, and I'll show you why. What I'd like to see is this sort of setup over the next week or two. Can the S&P kind of work its way back down in here and then form a right shoulder, right? This would be your left shoulder. This would be your head. And then can we form a right shoulder? This is the area that I want to load the boat long for the push into the end of the year through the rest of the month of November. Now, that may or may not happen, but that's what I'm looking for. If we could get a little bit of a drift, I'll make it a different color here. If we could get the indexes to drift down, come in through here, sort of find a little base, build a right shoulder, and then that is where I want to get long. That's what I'm looking for. All right, so two trades, really. The first one is you can come in. This is sort of the neckline. Actually, let me draw that a little cleaner. We can come in and say, okay, well, the neckline's here. If the S&P closes above the neckline, then this idea is invalid. It'll close its gap. You know, we can then say, okay, probably safe to just get on this bullish horse and ride it. But what I'm looking at is potentially some SPY puts for a move back down into about 424, right in through here. So we can form that right shoulder. And then from 424, some SPY calls, okay? So that's what I'm looking at. If we go over to the SPY and look at the options, for the puts, I would go out 2 weeks, out into the end of next week, which is November 17th, and just look at the 435 puts. Nothing special. Just the at the money puts, 2 weeks out in time. And then if we get that move down into about 424, I would actually go all the way out into December or even January, and just get some, maybe even January, 73 days out, and just get some of the same thing, probably the 435 calls, maybe the 430 calls, something in the money. If we get that move back down. Actually, if we're going to 424, probably the 425 calls. That's what I'd go with, for the push higher into the end of the year. All right, so that's what I've got. I hope it helps, and I don't see any point in covering any stocks at this point. There's lots of interesting names out there, but everything is just so incredibly extended. My favorite chart continues to be Microsoft, but it just is not even giving us a wink at a buying opportunity. The weekly squeeze here firing long this week. This looks fantastic for new all-time highs. So Microsoft is my favorite name to buy on either consolidations or pullbacks, and it just is not giving us anything yet to giving us any opportunity to get long. But that's one that I'm watching as well. All right, hope it helps, and I'll talk to you all soon. Have a great week.